Do you want to maximize your success with NCUA? Join Mark Treichel as he shares with you the insider's view on passing your exam with flying colors. The With Flying Colors podcast is sponsored by Credit Union Exam Solutions by Mark Treichel. If you would like to work directly with the Credit Union Exam Solutions team and receive support to optimize your results with NCUA so you save time and money, visit us at marktreichel.com to find out more.
Hey everyone, this is Mark Treichel with another episode of With Flying Colors. I'm excited to have a special guest today, Mike Bell of Honigman. Mike, how you doing today?
Good, Mark. I'm happy to be here. We've done this before, but there's always new stuff to talk about, and there's a lot of things happening this year at a great intensity. So I look forward to talking about it.
Yeah, that's great. For those of my listeners who may not have heard our previous discussions or may not be aware of what it is you do in the credit union arena, could you give a little bit of your background?
Yeah, Mark, I'm happy to keep it simple. And this is not my accident, to be honest, but I've worked my way into a situation where I help credit unions across the country, but every state buy things. So we're buying banks, bank branches, and then all sorts of other businesses, whether that's a title company, an insurance business, a specialized lender, mortgage servicer, you name it, that kind of ancillary business group is one end, and then whole banks are the other end of the spectrum of things that we're buying.
Very good. And it's funny because in my conversations with clients or potential clients, just general conversations with credit unions, occasionally it'll be coming up, hey, we're thinking about getting sub debt and the purpose is going to be to buy a bank, or it'll be, hey, we're in the process of possibly buying a bank. And inevitably I'll say, is there any chance you're working with Mike Bell? And I don't think anybody said no yet to that. So that's a good sign. That's a good sign for you. Business seems like it's well for you. So that's good. So let's talk a little bit about, I think last time we chatted, things had slowed down a little bit. And there was a period maybe during the pandemic where things had slowed down. But in the green room, as we were pre-chatting, it sounds like things are hopping quite a bit. So maybe give a little bit of the landscape of what it is you're seeing here so far in 2024.
Yeah, I'm happy to, Mark. And to be clear, you can look backwards, and we've been doing these and kept doing them through the pandemic, no question. But it did slow down. And what is occurring now? The pressures or forces that make a seller sell. And by the way, I'm speaking to any business. I'm not isolating just whole banks, really just sellers in general. They exist today as much as they ever have before. And they existed through the pandemic, but people didn't sell anyways because of, other forces. And then the forces that have buyers wanting to buy exist today just as they have forever. So we're in a situation where there's pent-up demand that exists from the last few years. And then there's the normal demand that's present for this year, forgetting what's behind us. Put that all together, and we have just made a stew of intense activities. So anecdotally, right? I'm not giving you an exact statistic nor camera, but anecdotally, if I said to you, hey, Mark, in a typical week, if I look at my list of things that I'm in the middle of, putting together in the middle of, the years where it's been wild, where we set records, I'd say, man, it's like 6 to 8 things. I tell you, Mark, right now, that number is over 20. It was beyond understanding. Essentially, I would have never guessed at this, and it couldn't have been predicted, but it's that active. And here's what's wild. If you look at the articles that American Banker or national publications will talk about the remaining or the continuing slowdown in bank-to-bank M&A. I don't disagree with that. I do think that remains challenged. But where we are at the small end of the market, or with the bank branch situation or with other businesses, those slowdown forces aren't as present, and we're going faster and more than we ever have before. It's pretty astounding.
That's interesting because I know earlier this year, FDIC came out with guidance and or a proposed rule on how they're going to be handling mergers going forward, and maybe as an effort to clarify the analysis they'll do, et cetera. And it seems like it's possible that is playing a role in bogging down what's happening on the bank side of things. You think that's accurate?
I do. So I was fortunate enough, really a few weeks ago, I did a podcast or video with the ICBA, and I loved it, and I want to do more. And we were talking about this very thing. And I'll tell you, I do think that today, as we sit here, the FDIC has got itself in such a situation that banks are not merging with banks, or they're pulling out of bank-to-bank deals because it's ground to such a halt. There's such a risk that it's going to take so long. No one wants to do business in that way. How that impacts us? For years, as we did, the conventional wisdom was, all right, if you are with them, you need to be prepared for another month to month and a half regulatory approval versus if you sold to a bank. That now is completely untrue. As we sit here today, we're just as fast, but actually faster than bank-to-bank combinations, which, by the way, I think is completely unfair to banks. I don't think it should be that way, but that's what's occurred. Subject today, we're not necessarily seen as the bidder that's going to take us longer. And that's a huge advantage for us.
Yeah, it went from being a disadvantage to credit unions to now banks, when they see credit unions are bidding, it's a positive. That's fantastic. That's fantastic.
Yeah, neutral at worst, right?
Or neutral at worst. Yeah. All you can hope for is a level playing field, right?
Yeah, just for years, I engaged in conversations where we're selling bank would be like, you guys have 25 or 6 days longer. We need to make sure that they understand that. And that was just a speed bump we found for like years, right? It's going to win. It's not present in our conversation today.
And the other, thinking back to our conversations and some things I've learned in some other podcasts, when a credit union buys a bank, it's an all cash deal because there is no stock that can be offered as the alternative. And to me, if I had a bank, if I was fortunate enough to own a bank or be one of the owners of a bank, I think I'd almost prefer cash over stock. And a lot of times banks buy one bank with stocks of the surviving bank, if I recall correctly.
Yeah, I mean, the right market. So I think inadvertently walked into another trend I wanted to talk about. But
yeah, go for it. Go for it.
Really on an economic cycle that actually has nothing to do with our industry necessarily. But where we sit today, cash is king. So due to the fact that bank stocks are impaired, there's been some tumult, the values of banks, their currency is affected. I'm saying as we sit here, sellers have a preference for cash because that value is known. It's a certainty. Now that's nothing that we cause. It's just a fact. 5 years ago, we were fighting to liquidate with cash because stock was preferred for where we were in the cycle. But I will tell you today, there are arguments out there that credit unions overpay, they're winning every deal. Those are both completely false, I'll tell you that. But I will say that we do have not an advantage, but our tendency is a preferred currency today, which might be why you're seeing a real success, not necessarily because we're paying more or overpaying. That's not happening.
Liquidity, every conversation I have with the credit union, liquidity is a focus at that institution for the obvious reason of what's going on in the economy. So when you can get cash in a deal today, it definitely is an advantage. So bank branches, I think within the last week, I saw maybe you were posting or you liked something on LinkedIn, but there was a reference to some bank branch purchases that have been going on. Could you walk through how that process works? How do you find out that that Bank X is in pick a state, Texas, is looking at selling, and then how do you connect them with potential buyers?
Yeah, so the bank branch do it. So just to start, just so everybody understands, we're not talking about a percentage vacant bank branch or a real estate deal. Just to be clear, but bank branch deal, when I said that, when you see the ones we've been announcing and the transactions we're involved with, it's like a mini bank deal. We're definitely getting the real estate and the fixers, so don't get me wrong. We're getting the employees, the loans, and the deposits. We're excising or surgically removing a part of the bank and taking ownership of it. So it's a mini bank deal, just so all the listeners understand. And then second, I'll tell you, it's a bit fragmented, right? There are banks that will not sell branches. There are banks that will just close them. There are banks that will try to sell them themselves. But in essence, I think a majority of the transactions will go through the funnel or the channel the traditional whole bank deals go through. So they'll hire an investment banker, and that investment banker will try to find a buyer for the branches. When that occurs, that's when I get involved. So there's investment bankers across the country that are very aware of credit unions and credit union buyers and my clients, and they reached out to me at the very beginning to see who might be interested or who they should talk to. And I'll tell you, Mark, that last year, I joked, but my law firm, myself, we led the world in the number of branch deals done by lawyers, and we did 3, which is hilarious. This year already in May, we just announced a transaction yesterday, announced one a couple weeks ago. I think we're at 5 or 6 for the year, and there's more coming. So there is 100% a trend today. Banks looking to gain efficiency, to right size, pick the word you want. And then there are buyers, credit unions that are very interested in being partners and buying in those deals. Let me add one final point just to emphasize what this does for a seller. You're a bank, when you're going to sell some branches and you answer to shareholders as you should. When you engage in a branch transaction, there are 2 things that you get to say to your shareholders rather instantly. That's a big deal. 1, we just got more efficient. 2, we made a little bit of money while we were getting efficient. Those are very compounding mark to shareholders, as you can imagine. And so these transactions, they ebb and flow again where we are in the economic cycle. I'm saying right now, we're in the cycle where it is happening time after time after time, very active today.
And then it seems historically, one of credit unions' arguments about how they fulfill their mission of serving people of modest means is these scenarios where banks pull out of areas and you have a financial institution desert, if you will. And oftentimes credit unions are the last to pull out and or expanding into those areas. So these are situations where if perhaps the spinoff didn't work for a credit union to buy them, those individuals would have less choice in that community. And the credit unions are stepping up to better fulfill the needs of those, what will now be members, et cetera, et cetera. Anything on that?
That's 100% correct. So I admit that beyond economics that I was getting excited about, branch deals are 100% feel-good stories based on fact. So as an industry, credit unions are net branch openers, banks are net branch closers. And I'm not saying one's right. I'm just saying as industries, that's absolute fact. You can look at the transactions announced this year, and you can see that many of the transactions are dealing with branches in rural or very small communities. And one of the reasons we're buying them is to keep them open, right? I've never done a branch deal where my credit clients, we're going to do a deal, we're going to close the branches. That's nonsensical. They are 100% buying them to keep them open, and they work for our business buying. Actually, was a really good reason. And again, I was talking with the NCUA about this. This is all good, right? Banks are getting more efficient. They're making some money. Branches are remaining open for nonprofit communities that need to be served. We're each playing our role. And I don't think that's anything to laugh at. That's a good win-win situation.
It's a win-win, and it's a win-win in addition to those employees who end up not having to go look for a job, even though unemployment's at all-time lows, they say. But the knowledge and the historical knowledge of that branch, for example, is something that picking those folks up is very helpful to the new institution of the credit union.
Yeah, no question about it.
So you talked about title companies and other acquisitions. Could you go into maybe a list of other things that people are buying, and then maybe we can have some follow-ups tied to that? That intrigued me a little bit, like buying a title company. How does that all play out?
Yeah. So typically this segment of the business is a little more scattered, right? So there are not necessarily investment bankers or people out there that consistently are in this space bringing these things to market. So it's more challenging in that regard. But I'll also tell you that I do think there are some strategies or ways to get yourself present in the market to the extent you're able. And I've had this belief, I can't give you a statistic, but I can give you, again, if you need donor or logical or common sense, I think people are going to relate to this. If you go to your Chamber of Commerce, Lions Club, Rotary meeting, right, community meeting, and you look around the wheel and look at the people that own the title company or the insurance company or the investment business, what color's their hair, right? And that's not good or bad, it's just a fact. And I have seen a mass movement towards people retiring and all these businesses, the great businesses, and we're buying them. In February of this year, Mark, unrelated to anything, up and down and across the United States, I have 4 different credit unions buying 4 different title companies, all of which the folks that are retiring, right? That just gives you a sense. Now, that hasn't duplicated itself in April or May, to be clear. But that gives you a sense of what I'm saying with these businesses. And I'll tell you, what I say with credit unions, I am not saying you should buy a title company, right? I didn't say that. What I am saying, though, is you should think about, do you want to be in these ancillary businesses? Do you really want to do insurance, investments, title, whatever? Because if that's a yes, then I am saying to you, this is a time to keep your eyes open and perhaps buy something in that business. These things, if you look at what I would call your standard community bank, or today, your standard community-based credit union with some size, we're in those businesses. They're in those businesses. I mean, credit unions have been in these businesses forever. And I think more and more are getting into that due to the pressure on non-interest income and all of the other things going on. So I do encourage your listeners to simply examine their strategy. Do they want to be in these things or not? And if that answer is yes, well, then I'm saying economically, this is the time to look around you and see what might be for sale, or see if you can effectuate any sort of buys ourselves. Because it's real right now. There's a ton of activity in that space.
And it's like the small credit unions who have the CEO who has the gray hair, who then decides, board, I'm retiring. What do we do? Ends up leading to a merger. So it makes sense that the small businesses would be facing that same challenge. And a challenge for one is an opportunity for another.
But you have a very large credit union account, billion, $2 billion, $2 billion. You have challenges hiring talent. I promise. Imagine if, right, a local title company or a small credit union or a small business, like the succession planning talent type challenge in our industry lives up and down the scale. And I think it actually is obviously more pronounced and worse towards the bottom end of the scale. So that is certainly driving. There is a driver on some of these options for sure. That's real.
When you talk about you should be examining your strategy, not leaving these opportunities for, say, acquiring a title company. Now, on the bigger end, back towards the, hey, I think I might want to buy a bank. When someone reaches out to you the first time saying, again, I'm a credit union, I'm a $3 billion credit union in thus and such state, and I've never contemplated buying a bank. I'd like to talk to so let's say this is the CEO, he reaches out to you. I'd like to talk to my board about this opportunity, but before I do that, I'd like to understand more what I should be thinking about, the pros and cons. So when someone reaches out for you the first time relative to that, what's that first conversation like?
Yeah, so I handle it because that happens, Margaret. It's happened now for 14 years, right? So we today, as I sit here, I'm the beneficiary now, having a conversation now 2 or 3 other times. I have to slow it down into about 45 minutes where we can walk through it A to Z, right? About what is it? How does it work? What's the math? Why do my peers do it? And why don't my peers do it? Because there are 2 sides of the fence. And I explained to that CEO, look, I defer to you. If it's you and your C team, or, your board or a combination, whatever you want to do, but give 45 minutes, let's walk through this thing. And I think at that point, you can decide, not for us, let's go deeper, because there's more to do, right? We don't solve it, but we get enough out that I think you can make an informed decision to want to stay in it, and otherwise I don't. And Mark, I'll just add, if you look at the list of the top 30 credit unions in the United States of America by size, I've probably talked to most of them. Not all of them, most of them. And I think you could say it's 50-50 or 60-40, those that are like, yep, this is for me, and those that are like, this isn't for me. I think both are the right answer. I'm not an advocate for do this or else. I'm an advocate for get it in front of you and then make that decision.
That makes sense. And as you're walking through that, I've moved around the country, bought and sold a lot of houses, and gone on official house hunting trips when I got relocated with NCUA. And I'm just thinking about going out with the realtor. And the first day you go out, there's 3 or 4 houses. And You might not like any of them. You might like one of them. You might even put an offer in and get outbid or not get it, especially more recently. And I'm guessing that if somebody is interested, it makes sense to not wait to, hey, I might be interested in 18 months, so I'll call Mike in 18 months. You'd be better off having that 45-minute conversation today. Because odds are, like you said, the credit unions aren't outbidding every situation. I'm sure that every first bid by a credit union is not successful, and it helps them once they go through it one time, they understand the process better and might make them better prepared for their second offer for a bank. Is that an accurate story?
Yeah, and it's so famous. I didn't have to comment. Your analogy is so accurate that if you heard me talking on the phone and didn't know what I did and didn't listen to all the words, you would think I was a realtor. That's honestly truthful, Mark. It just happens to be banks, but that's how it sounds. Second, so these things have a timeline. So if a client calls me and says, I want to learn about this, but we're doing X, Y, and Z, and we really can't do this for 12 months, I would say, I'm glad you can. We can start now. We're not if we do some, we're going to take a year and a half anyway. So that's a correct point. Second, this is not like my hair's on fire and urgent. But if you think you want to be in this game or they're dabbling, I would say now is always the time to get in. Once something's sold, it's gone. But also, there's so many sellers today. There's so much activity. I think pricing is advantageous for buyers. It's a buyer's market, in my opinion. And so it's a good time to get in. And then the last thing I'll say, you make a good point. We do the 45-minute thing, we get smarter. So we actually get to the process. Even if we lose or we're unsuccessful, it's 100% true that you have gained an education. There's no question about it. When we walk through that first line and we go through the first 3 or 4 steps, even though we don't make it to the finish line, I explain, look, we are better than you. You are going to be that much better when we go to line number 2, 3, or 4, because we absolutely have gained some real knowledge. Then I'll tell you that on the flip side, everybody I wondered said, yeah, true, right? We get the learning curve now. We understand how things work. We know the words. We know how the math goes. And so there's really a benefit to that, no question.
That makes sense. That makes really good sense. So what else? So anything else? Is there a question, Mike, that I should have asked you that I have not yet asked as it relates to anything you've got going on in the credit union space?
I've been so let me answer what I would call the trends at the moment. I think it's important. I mentioned it, but I want to get people, this is the only thing they listen to these minutes just so you understand what's happening. Number one, on the bank side, there's more activity than there ever has been. Every small bank, I mean, $1 billion or less bank in our country, I'm telling you, is either for sale or would sell as approached. Certainly there's exceptions. Don't get me wrong, right? I know, slightly facetious, but not really, Mark. Like it's amazing what's happening now. Number two, bank branch transactions are exploding. There are many opportunities out there for them. That's real. People need to pay attention to that. 3, the ancillary business thing I mentioned, a lot of baby boomers retiring. That's also real. And then I want to add one thing we didn't talk about. It's something that I do. It's just not really the big more flashy stuff. But I want to tell people that in the credit union combination space, I am seeing and noticing, I talk to my colleagues in this space and they agree, a trend, Mark, where more and more, let's say, large credit unions are considering mergers of equals. I think that if you look close, in the last years, you would see maybe one or two a year announced. And I was like, that's crazy. I think this year you've already seen, or end of last year, this year, 3, 4, or 5 announced. And I'll tell you, we're involved in 2, 3, 4 more that aren't, to the finish line yet. It may not be. But as I sit here, I can't ignore the fact that activity level has really picked up. Those are the 4 things that are really apparent and are happening today that next year that risk might change, right? This is all cyclical. But all 4 of those things are real and I think should be on the mind of your listeners, whether in those games or not, they ought to know what's happening.
That's a great summary. And I can confirm from my conversations that the merger of equal arena is cyclically hot right now. I definitely wholeheartedly agree with that. So very good, Mike. So if a listener has heard this and is listening and you know what? I've never really thought about acquiring the things we've discussed here today, banks, a spinoff, a title company, and they wanted to reach you. What's the best way for them to get in touch?
Yeah, so I always tell people, just feel free to start with LinkedIn, similar to you, Mark, similar to the guys at Olden Lane, friends of ours. I am very open about LinkedIn, put out a lot of content. Every time there's a deal announced, you're going to see it rather instantly. It's a really good way to connect with me. And even if you don't want to connect with me, I mean, you just watch me in the background. It's the same way you do it and really get a feel for what's happening in this space, right? So it's very, very good. And then my last one is Honigman, Honigman. And folks can find me all my information, all the news releases, all the deal announcements on our website, in my bio, and with all my contact info, right? Email, cell phone, desk phone. But I would encourage you to jump on a LinkedIn. By the way, not just mine, but yours too, Mark. And I'm serious, the guys at Olden Lane, between the three of us, we kind of cover most, if not all, of the things that are happening today. And it's pretty good. I don't have people mention that to me, that they can get a pretty good pulse on the industry just by a few LinkedIn pages.
That's good. Yeah, I love LinkedIn. I'm on it daily, and I like seeing what you post there. And I will put the contact information, a link to your LinkedIn and your company's webpage in the show notes for this episode. So, Mike, thank you so much. Appreciate the update on everything you've got going on. It's exciting time for acquisitions indeed. And listeners, I want to thank you for listening. As always, I hope you'll listen again soon. This is Mark Treichel signing off with Flying Colors.
Thank you for joining us on this episode of With Flying Colors. Subscribe on your favorite podcast app to hear future episodes where subject matter experts of all varieties will provide tips on how to achieve success with NCUA. If you would like to learn more about how we assist credit unions, check out our services at marktreichel.com.